Now we will discuss about revenue recognitions of a not-for-profit entity. So you all are familiar with the revenue recognition of a for-profit or a public companies. Usually public companies record their revenue or earn their revenue when they provide any service or when they ship the goods. So now if you think the not-for-profits revenue recognition from that angle, then you will see that most of the cases not-for-profit organizations may provide service. It's very rare that they are selling goods. So that means when a not-for-profit organizations provide any service, definitely they are earning their revenues and they will record it. So we actually call it revenue, this type of revenues, as revenue from exchange transactions. So that means a revenue from exchange transaction is one type of revenue in which the not-for-profit organizations earn any resources in exchange for a service performed. And remember here, these type of revenues which they earn through providing any service are classified as unrestricted. So again, I'm repeating, when they provide any service and earn the revenues, we always show it as unrestricted net assets. So basically, those revenues are recognized when they are realizable and earned, or when they realized. And you can think of few examples. For example, the patient service revenues earned by a hospital, or student tuition and fees earned by a not-for-profit university or colleges, or membership fees earned by any type of not-for-profit organizations. So these are basically the exchange transactions related revenues earned by not-for-profit organizations when they provide any service. Now, another type of earnings we know, that is the contributions, and we know that contributions are the major source of earnings for most of the not-for-profit organizations, and we need to learn how and when we will record those contributions. So the contributions, a contribution basically means that you are either receiving any cash or assets, and here donor should not have any obligations to donate. That means those type of transfer is completely voluntary, and it should be non-reciprocals. That means donors are actually not getting anything in exchange, right? So these are some sort of voluntary donations, and that could be in different forms. It could be in cash form or any type of assets, or any donor can transfer in type of investments, physical assets, or sometimes you can also provide some services. For example, voluntary services. Many of you probably did that, right? So our not-for-profit organizations can receive benefits by any donors they are providing services. So we will learn how and when what to record under these contributions part. So donation can also be a cash contributions, or that could be pledges. That means when people are making promises. So remember, if you receive cash contribution, which is very straightforward, and you have to record those as revenues when you receive it. And remember, those should be measured at their fair value. On the other hand, we will discuss the second type of contributions, which when the donors are making promises, which we call pledges. But I can discuss a little bit about other contributions for as service, voluntary service. If a not-for-profit organization received any voluntary service, you have to check whether it requires any skills, or anyone can provide that type of service without skills. So if you see that it requires any specific skills and the organization will get benefits, and either it will improve the value of their assets or any type of financial benefits, then the not-for-profit entity must need to recognize it. On the other hand, if you see that from any voluntary service which does not require any specific skills and knowledge, and that is not increasing the value of any long-term assets, then the not-for-profit organizations do not need to record or recognize it. They will just disclose it as footnote. And another thing, as I mentioned, that the donation could be in any form, any format. Either it could be a cash donation or any type of voluntary service or any type of assets. Remember, if a not-for-profit organization receives any other assets or any type of investments, you have to record it as per the present value or the fair value. Now, let's talk about this pledges. That means when people actually make promises to make donations, and those pledges could be two types. One is unconditional promises and another is conditional promises. And as I just mentioned, that your pledges or any type of promises to receive any contribution could be two types. One is unconditional, another is conditional. So if it is an unconditional, then we will record it as a pledge receivables or contribution receivables, and we will also recognize it as a contribution or contribution revenues. Remember, if it is unconditional, you can record it as a contribution revenue right away. And when you're gonna collect it, you will collection of cash will increase your cash, so you will debit the cash and you will remove or you will credit your receivables, whatever you call it, a pledge receivables or contribution receivables. And remember, these are promises and you're gonna receive in the future, so you always need to record it as per the fair value or the present value. That means if any person makes a promise that he gonna donate a certain amount of money in 3 years, and if it is unconditional, you will show it as a pledge receivables and we will record it as per the present value. Now, if the pledges are conditional, now first you have to check that what type of conditions the donors are showing here. Look, it's not restriction, it's a condition. So for examples, a donor can make a condition that he will make this donation if unemployment rate goes up more than 10%, or a donor can make a condition that he will make this amount if a certain law is passed by the Congress. So if you see that those conditions are very certain, that it is certain the conditions will be met, then sometimes not-for-profit organizations can treat it as unconditional pledges. But if you see that there is uncertainty, but you are not sure whether the conditions will be met or not, then you have to record it as a liability. That means if you receive cash right away, that's fine, you can debit cash, but you cannot recognize it as a revenue, contribution revenue. That means if you see that the condition is uncertain, you really don't know, then you have to record it as a liability. Then when it is met, you will credit your contribution revenue. Now we will see few other items under this contribution topic. One thing you will see very frequently when not-for-profit organizations actually record these revenue recognitions which they receive through different pledges and through different promises, and which is allowance for uncollectible pledges, because we know those are all promises and sometimes donor may not fulfill all those promises, just like the doubtful account or bad debts if you think of a for-profit organization's perspective. For example, if a public company sells products, then the company should, and it's on credit, the company should debit it as accounts receivables, but sometimes they can think of it whether they will be able to collect the whole amount from their customers. And that's why for a for-profit company or a public company, we show it as a bad debt expense, and we create a provision which is called ADA, allowance for doubtful account, and depending on how much you are able to collect, we actually reduce this amount, and it's actually a contra account receivables. So now for a not-for-profit organizations, many entities, they also check what is the possibility or what portion of those pledges or promises will not be collected, and they will show it as in an allowance for uncollectible pledge, and depending on how much they are able to collect their contribution receivables or pledge receivables, they will increase or decrease this amount. So which is also a common practice, this allowance for uncollectible pledge account. Now we will discuss about few other types of contributions, and you already have some idea from past week when you read chapter 18, and I also discussed a little bit at the beginning of this concept. And one item is donated services. So if you see that any person or any group of people, they are providing any voluntary service to any not-for-profit organizations, then they have to check whether those type of service would require any specialized skills. For example, if they provide any accounting service or any legal service or any patient care service that require the skills, or the person the service would be performed only by a person who is an attorney or accountant or a medical doctor. So if it requires any type of specialized skills, then you have to record it. But if it does not require any skills, then you don't need to record it. For example, a group of college kids, they are helping a not-for-profit organizations to do some cleaning stuffs or to reorganizing their library books. So this type of voluntary service would not require any skills, and in that case, the not-for-profit organizations will just disclose it in their footnote. They don't need to record it. Now another point is that if any type of voluntary service would increase the value of their any fixed assets or non-financial assets, then they have to record it. For example, a group of people, they are working to they are providing any voluntary service to extend a part of their building, then that is increasing the value of their building, so you have to record that type of voluntary services. Now the second item is donated item, which may include any type of art or historical treasure, and we also discussed it in chapter 18, and there was a quite long debate whether the whether the not-for-profit entity would record it or not. So basically after that long debate, FASB actually decided that not-for-profit entities do not need to record all those type of contributions, art or historical treasures, because basically the logic is that they are not getting any financial benefits. Those are used for just for their exhibitions or viewing purposes or educational purposes, and they actually protect it and preserve it, and even they usually maintain a policy that even they sell it, those will actually be used to collect other type of items like another art or treasures. So if the situation is like this, then the not-for-profit entities would not record any type of contribution if they receive any art or historical treasure. Sometimes not-for-profit can receive any investment, and if you receive any type of investment, you have to record it as per their fair value. So just as a summary, again, donated service, you will record if it requires any skill or if it increases the value of your non-financial assets, and donated items if it's an art or historical treasures, and the entity will not get any financial benefits. This is just for an display or educational purposes. Then you don't need to record it. And if it is any donated investment, record it as per their fair value. Now we need to learn one more item, and you will see that sometimes when the not-for-profit entities try to collect all of their donations or try to increase all of their contribution amount, they can spend few amount of dollars for their fundraising purposes. Sometimes they can publish any brochures, or they can make like pens, coffee mugs, calendars, and they can give those to donors, and the purpose is just to do their fundraising campaigns. So if there is any type of expenses that relates to a specific fundraising campaigns, then we have to subtract that amount from our contribution part. So basically, whatever the contribution we receive, and if we spend any amount to get all those contributions, we have to subtract that, and we will subtract as per the fair value of those fundraising expenses, and this is how you will show what is the net contribution revenue. Now we have to remember another type of classification. So if we receive cash contribution right away, definitely we'll debit cash and we will show it as a contribution revenue, but at the same time we need to classify whether it is an unrestricted and temporarily restricted depending on donors restrictions. Now remember, if you receive any pledges or any promise from any of your donor, we basically debit pledge receivables or contribution receivables, and we also record the contribution revenue. But when we have to classify it for all type of pledges and promises, we will actually classify under the temporarily restricted fund until the promise or the pledges is collected. So it will be considered under the temporarily restricted fund. Now we'll practice few CPA sample questions. So the first problem, it says that Jones Foundation during the year 7, they received the following support: a cash contribution of $875,000 to be used at the board of directors' discretions, a promise to contribute $500,000 in year 8 from a supporter who has made similar contributions in prior periods, contributed legal service with a value of $100,000 which Jones would have otherwise purchased. So at what amounts would Jones classify and record these transactions? So here they are first receiving $875,000, a cash contribution. So basically here the point talks about a discretion, but it is board of directors discretion. It's not any restrictions imposed by the donors. So we will consider it as an unrestricted contribution revenues. And basically when you will see that there is no restrictions from the donors, we will always consider it as unrestricted, or in our current term we will call it's the revenue without donor restrictions. Now second item, a promise to contribute $500,000 in year 8 from a supporter who has made similar contributions in prior periods. So here it is a promise, it is not collected yet, it will collect in year 8. So we just discussed if it is a promise or pledge, it will be considered as a temporarily restricted, or in current version we will call it's with donor restrictions. So until it is collected, we will call it is actually with restrictions, or it is considered as a temporarily restricted. Now contributed legal service, which has a value $100,000. So it's a legal service, voluntary service that the entity actually received. If they wouldn't receive it, they would have to purchase it, and it's a legal service. It definitely requires skills and knowledge, so definitely we have to record it as a contribution revenue, and we'll consider under the unrestricted or without restriction part. So basically here the entity will consider this $875,000, which is, although there is board of directors discretions, but it is without donor restrictions. We don't see apparently any restrictions. So these 875,000 and this legal service revenues, which value is 100,000, we have to record this as a contribution revenue. These two together, which is 975,000, we will consider as unrestricted portion on unrestricted contribution revenues. Now here we have this promise or pledge, which is $500,000. These $500,000 we will call it temporarily restricted, or it's with donor restrictions, because until it is because it is a promise, it is not yet collected. Until it is collected, we will consider as with restrictions. So this is actually with temporarily restrictions. So let's see the answer options. Our answer is D. Now next question. PICA, a non-governmental not-for-profit organizations, they received unconditional promises of $100,000 expected to be collected within 1 year. So they're gonna collect it in 1 year. This is unconditional promise or pledge, so it is actually a receivables, and they will receive it soon. And PICA received 10,000 prior to year end. PICA anticipates collecting 90% of the contribution and has a June 30th fiscal year end. What amount should PICA record as contribution revenue as of June 30th? So now when you receive any promise or pledges, we actually record it as a pledge receivables or contribution receivables. And when we see that it is actually collected during this fiscal year, we will record it as a contribution revenue and we will show it as unrestricted portions. But if it will be collected in near future, then we'll show it as with restrictions or temporarily restricted. Now there is one issue, which is here 90%. PICA anticipates that 90% of they will be able to collect 90% of the contribution. That means they will not be able to collect the other 10% of the contribution. So basically we call that amount as allowance for uncollectible pledges, right? So basically here, if you think of their contribution revenues, the net contribution revenue will be this total promise, total receivables, which is 100,000, and they will be able to collect only 90% of it. That means they will not be able to collect another 10%, and these 10% we call it allowance for uncollectible pledges, right? Or uncollectible account or allowance for doubtful account. It's just like the ADA, the portion that you are in doubt whether you will be able or you will not be able to collect. So basically they have to show their contribution revenue as $90,000. Now the answer is actually here C, and this is they are going to record as their contribution revenue, because it is very common. You will see that for unconditional pledges we show it as a revenue, but we are also check how much we will be able to collect. So here they will record this entire amount as a pledge receivables. So if I want to show you the journal entry, pledge receivables, receivables, and that's $100,000. Although they collected 10,000, don't be confused with these 10,000s with that ADA or allowance for uncollectible pledge amount, or allowance for doubtful account or uncollectible accounts. This is they already collected, and they're gonna collect the rest of those portions within the year that ends on June 30th, but they will be able to collect only 90% of their entire receivables, entire promise. So we basically, if you remember from your basic financial or intermediate accounting, we actually call those uncollectible portions as doubtful accounts, and then later we will check how much we will be able to collect and we'll show it accordingly. So they have to reduce that portions from their pledge receivables, and they will be able to show these $90,000 as their contributed revenues. Now, next question, that a not-for-profit organization received $150 from a donor. The donor receives 2 tickets to a theater show as an acknowledgement in the theater program. The tickets have a fair value of $100. Now, they receive a donation $150, but at the same time they are giving 2 theater tickets to the donor. So remember, donation means unconditional giving and non-reciprocals. That means if you receive anything in exchange of it, then that part will not be considered as a donation. So the donor is receiving 2 tickets, and the fair value of the tickets are $100. That means basically he is receiving something in reciprocal, so we have to take out this $100 or these 2 tickets value, and the net amount will be actually our contribution revenue, pure donations. That means $150. Apparently it seems the total amount of donations, but we have to take out the value of those tickets. So basically our answer is B. $50 is actually our net contribution revenue. Now we will do one CPA question which is related to healthcare entities. And if you remember from your last week's chapter 18's last portion of the lecture, where you learned your examples and few journal entries that are related to healthcare entities. So here, a Hospital Inc. is a not-for-profit organization, and there are no governmental affiliations, and they reported the following items in its accounts for the current year ended December 31st. Gross patient service revenues from all service provided at the established billing rates of the hospital. Note that this figure includes charity care $25,000. So total amount is $775,000. This is their gross patient service revenues from all services they provided this year, and out of that they have a charity care $25,000. They also have a provision for bad debts, which is $15,000, and they should receive a portion from a third party, which usually is an insurance company. But they found that there is a difference between their billing and the fees what they received from the third party after negotiations. So this we call contractual adjustments, and if you remember, it will actually reduce the portion of their revenues. So the contractual adjustments amount is $70,000. Now the question is, what amount should the hospital report as net patient service revenue in its statement of activities for the current year ended December 31st? So one key difference you have to remember here: when you are providing any service that many not-for-profit organizations can do, and especially not-for-profit health entities, they provide patient care service. This is a service transaction, and this is a transaction, and you basically record it as a service revenues. But remember, here when they record it, they may think of a portion may not be collected at all, right? So when these are the revenue from exchange transactions, and you have to think of the portion that you will not be able to collect. Just like the for-profit entities, healthcare entities also show those as bad debt expense, that they are not going to collect it. And basically this is the provision for bad debt, which is an expense, and they also will show an account which is allowance for uncollectible amounts. So basically these uncollectible amount will be used to adjust with their account receivables. But when they are going to record their service revenue, they will record the service revenue without considering this doubtful or the bad debt part. But on the other hand, if it is anything about contribution, that means contribution revenue, which the other different type of not-for-profit entities can receive, and if they think that any amount is not collectible, definitely they need to deduct it right away from their contribution revenues, because they need to show their contribution revenue as per the net realizable amount. That means if it is a contribution revenue, they need to subtract that uncollectible portions. They need to report the contribution revenue as per the net realizable amount. But on the other hand, if it is service revenue and we are talking about the patient care service, they will consider the service revenue excluding the point of provision for bad debts, because this bad debt is not a contra revenue. Basically this is of course a portion that they may not be able to collect, but they will show it just like the for-profit entities through their allowance for uncollectible portions, and that allowance for uncollectible portions at the end they will say how much they will be able to collect or not. That will be used to adjust their revenue receivables. Now here you have to also think of this charity. This is their charity care, so they need to subtract the charity care from their gross patient service. And if you remember the last chapter 18's last couple of journal entry examples, that if you see that there is any contractual adjustments, that will also reduce the revenue. So basically the patient service revenue, and the question is asking about the net patient service revenue, it will be their gross patient service revenue, which is $775,000. Then out of that, 25,000 they basically provided as charity, so we will not include that. And there is contractual adjustments with the third-party payers, and they will not be able to collect it because this is the billing amount, and the difference between the negotiated amount, whatever the insurance company will pay, there is a difference. So this portion we have to exclude it. So after excluding these two items, 775 minus 25,000 minus 70,000, that will be their net service revenue. Here again, please remember, these bad debt is not a contra revenue. Bad debt is an expense. So basically when they will record it, they will show it as an expense, and they will debit it as an expense, and they will credit their allowance for uncollectible amount, and later they may adjust those allowance for uncollectible amounts, and this is how they will show their net patient service revenue. Now the next question: in April of year 1, Delta Hospital purchased medicines from Field Pharmaceutical at a cost of $5,000. However, Field notified Delta that the invoice was being cancelled and the medicine was being donated. Delta should record this donation as of medicine as. So now the question is, they basically wanted to purchase it. They actually did it, but later it is cancelled, and they are kind of receiving those medicines as a donation. So yes, of course they are receiving, and they have to record it as a revenue. It's not only a memorandum, and you cannot credit your operating or non-operating expense. They will record it as an other operating revenues, and basically when they will use those medicine, they may show it as an expense.